Welcome, everyone. And oh my God, what an earnings call, what a company update, what a pivotal moment in the history of Tesla. Let's jump right into it. As always, I will translate all the most important points of that call into actionable price outlooks and into the question what we do about it as shareholders and options traders potentially. So this earnings call happened yesterday. Elon was on the call. There were some questions. The questions were not very impressive, not very smart, but Elon said some very important things and the Tesla team. So what did we see? Let me share my screen very quickly so you get the full rundown. What we saw in this call was, I will go through all the different segments of Tesla and then translate it into the exact strategy, what it means for the share price and what it means for the financial model that I also already updated. Let's begin with cars, with the core sector, cars and energy. I will make it very quick. The most important question for cars was, will we see affordable models and will it be Model 3 and a Model Y shape or will it be some crazy new thing? So it was boring but effective what we heard. We got a confirmation that these will not be revolutionary new models. We knew that they're coming very soon and there will be effectively, that is my interpretation here, stripped down versions of the Model 3 and Y. They expressed it differently. Hey, creating these videos is a lot of work. Please like and subscribe. It really helps out the channel. Now let's get back to the video. I think there might be some major facelift or face drops, if it's cheaper, of the Model 3 and Y, but don't expect some crazy new car. This will be driven by stripping this stuff down, changing the shape a little bit, making sure it can be run and manufactured within the existing CapEx structure with no retooling, not any big retooling. So this is all about money, bringing down the price and not blowing anyone's mind. It's economics driven. Interestingly enough, Elon remained dead silent on that question. He was bored. He was like, I don't care. It is very clear to me, reading on the meta level into this question, Elon doesn't want to hear about it. He's annoyed by the whole thing, says, I don't care. It's extremely uninteresting to me. These stupid, stripped down versions. There's only one tweak to it that will be interesting. So cars, they confirmed they will deliver a cheaper car that will unlock, I think, a 3 million run rate in 2026 on conventional cars, which is fine. No one really cares. On Optimus, as you see, I make this very quick, give you the top line results here because we have to go into the financial model and my updates, and then we have to go into share price. That is what really counts here. Let's talk about Optimus. So Elon confirmed multiple thousands end of this year, but he also emphasized, he's taking back some of the things, I think. Before he said easily 5,000 this year and easily 50,000 next year. Now he's saying multiple thousands end of this year. So he's downplaying it a little bit. He says clearly at the end of the year, not earlier. So he's pushing back the timeline. And he also indicates it's not going to be easy. It's a completely new product. And he also mentioned 1 million Optimus robots in 2030, which is less than I estimate. So interesting. He's emphasizing how difficult Optimus is. He is kind of the anti-hyper, which is very weird for Elon, who's normally the hype guy, who always is ahead of, who always hypes up the products. FSD promises us every year it's not coming until this year. And on Optimus, he's doing the opposite. He's actually behind most people. Most people, including me, say we have 2 or 3 million Optimi or Optimus in 2030. But Elon says, it's 1 million in 2030. It's going to be very difficult. Everything is difficult. Why is that? Well, that's speculative. But I think, normally you always go into the other direction of what the masses basically expect or tell you. If you're Elon, everyone doubts you, you become the hype guy. It's like, you are stupid. Robotaxi is going to be here next year, even if you don't believe it. But if everyone comes to you and says, sure, Elon, robots are so easy, I'm sure you have millions of robots next year, then you're doing the opposite. It's like, wait a moment, guys. This is a little more complicated than you seem to think. So it's an interesting dynamic that Elon, when it comes to Optimus, is the anti-hype guy. I do not believe him. It's 1 million in 2030 for many reasons. I think it has to be more because the competition is actually severe for Optimus. I think Tesla still has insurmountable moats and will dominate that space completely. But they can't just wait and have 1 million in 2030. There will be way over 1 million robots by 2030 from China and all kinds of people. So let's see. And Elon also was asked, is Tesla the number one? Is it a winner takes all, or what's happening in the humanoid robot space? And Elon said, of course, Tesla is number one, but he also said the number 2 to 10 will be all Chinese, and that is not great. My interpretation of this whole thing is Elon is pissed a little bit that everyone is just expecting Optimus to be a walk in the park, no pun intended. It's going to roll out. We have millions of humanoid robots, and he's putting a little bit of stop to it and says, guys, this is very difficult. We have to invent a whole new product, whole new supply chains. So he's pushing back a little bit, but I think he's overdoing it on the pushback side. So we have to calibrate for that. The most important takeaway here is, even though we are all super excited about Optimus, make no mistake, Robotaxi is where all the money is before 2030. I agree with Elon on that. If you talk about tens of billions, hundreds of billions in margin, Robotaxi is what you have to look at, not Optimus, pre-2030. And Robotaxi will continue to reap in hundreds of billions and more, trillions in margin in the 2030s. I think Optimus will then catch up very quickly, but we have to understand, as shareholders in the next 5 years, the real cash flow, the radical unlock will be autonomous driving, which is important because I think you, including me, Randy, for example, Randy Kirk, Herbert, Farzad, we are all getting carried away by, and what's his name, Chris, the dumb money man. So we are all getting carried away with Optimus and humanoid robots because they're so transformative. But let's make no mistake, the cash, the trillions are coming in through Robotaxi first. So let's go to the most important thing, Robotaxi. Elon is saying multiple millions of self-driving cars and Robotaxis by the end of 2026. I will give you my interpretation later when we look at the financial model, what that means. I don't buy it. I think that's bogus. That's Elon talk. Here I go on the other side of the equation, say Elon is completely exaggerating. We will probably not have multiple millions. If we do, I'm the first one who says thank you, Elon, because I will benefit from that. But I'm taking this down to 200,000 by end of 2026, which is still more than enough. He also said 10 or 20 on day one. That was very valuable for me. So we know in June on day one, we are going to look at 10 to 20 Model Ys, because that's the next thing he said, Model Ys. Super important. So 10 to 20 on day one. Okay, that's tiny. And so that means they want to tip the toe into the water and see what happens. I'm pretty sure nothing happens, which means then they can scale. Day two might then be more. Maybe week two, there will be more. And with more, it's probably not double. It's more like, more than double, 5-fold or something, because of 20 work and there's not a big problem. You deploy 50, maybe 100. He also said, this is super important, there will be all Model Ys. That was extremely important to me because I thought we have cybercabs coming because it would look so much better. No, it will be all Model Ys. I thought about it more. Of course, I was disappointed when I heard it's like, I want cybercabs, they look so much better. But then I put my financial hat on and my big picture hat. That's what I love about Elon. Of course, Elon thinks about this a little bit more than me. But Elon also, he just has big picture vision here. You take a step back and look at Tesla's point in time in history. This is not the time anymore for Tesla to pull some PR stunts. We are in the middle of the AGI revolution. Tesla is in the middle of unlocking crazy things. You don't need fancy new cars. You need stripped down versions and you need economically sound versions. Now it's about plastering the planet with economically superior products. Nothing else matters. They don't need to be super fancy. They don't need to do PR. They just need to deliver on the money. That's why the stripped down versions, fast, capital efficient, not super exciting, but below $30,000 hopefully, does it on the car side. And on the Robotaxi side, who actually cares about Cybercab versus Model Y? Maybe you say now, Joe, you're stupid. You said it's so important. Yes, I said it's so important. But when I think about it again, it's very clear, and I said that too, the only thing that matters here is that this stuff works, that we have low wait times, and we have costs under $1 quickly per mile. I always said nothing else matters. It's an economically superior play. In the end, all humans are economists. Intuitively, they want to get more for less money, and that is the central driver of everything. Everything else is fluffy, stupid stuff. Look at Waymo, fluffy, stupid stuff. Expensive, self-driving, no one wants it. So, and no one can deliver it. So that's why I think maybe this Model Y situation, even though it's very disappointing from an emotional perspective, doesn't matter or might even be good because it takes out all uncertainty about the car. Model Y's work. It also helps us to understand this stripped down version is so smart because it's basically a bridging point economically between Model Y and Cybercab. So if you can deliver at scale cheaper versions, of course you deploy these cheaper versions as robotaxis. But you're not going to put your premium Model Ys on the road if you can have your cheap Model Ys or whatever it's called, Model Mini Q, on the road. Hey, if you want to stay ahead of capital markets and the next Tesla moves, join us in Pioneerlands. Here we track Tesla, capital opportunities, AGI disruption, and politics. It's your critical information advantage in the age of AGI. It's free and the link is in the description. Let's get back to the video. So now we have a nice bridging point where you have at scale production of a cheaper model for robotaxis when you need maybe 100,000 or something before Cybercab scales. You take the cheaper model and churn it out. So that's very interesting. You have Model Y, Model 3, you have the cheaper versions and the Cybercab. If you just draw the line on COGS, these are 30 to 35,000 COGS. The next thing will be 20 to 25,000 maybe on the cost side, the thing that's coming this year at scale. And then the Cybercab will be 15,000 to 20,000 at cost, right? So it's a nice scale down of cost while you scale up robotaxi volume. Very interesting. Cybercab is confirmed at scale for Q1 2026. Okay, now we have the big picture. That's basically my main takeaways from that call. Forget about all these earnings per share. No one cares about this stuff. The bottom line on the financials was Tesla still makes money, even in the worst quarter ever, not ever, but in a very disappointing quarter, they still were cash flow positive. They're sitting on what, 37 billion in cash and get even more cash, even if the quarter sucks like Q1. And of course, Q2 is going to suck less and Q3 is going to suck less. So let that sink in. Tesla is one of the greatest cash production machines in the world. It has the highest R&D spend on robots and on autonomy, of course. It has the highest cap install base on intelligence. This is completely ridiculous to assume anyone can compete with them. And they're still raking in cash like crazy. So that's the bottom line from the earnings call. Let's think about what it means, because now it gets very interesting. What does it all mean for us? You have probably seen my video that got a lot of views. It was my most successful Tesla video, by the way. My last one from Monday, I think, or Sunday. We talked about the when do we reach $1,000 share price? Well, now I can tell you when we reach it. I can even tell you when we very likely reach 2,000. Let's be systematic about it. Let's go into the valuation model and see what that does. Right, here's the valuation model. And I want to show you guys some things. I want to show you what that all does to the valuation model of Tesla. You can find this at pioneerlands.net. There will be an ad in this video somewhere, pioneerlands.net. Go there. This is only premium, so you need to pay $9 a month to get access to the constantly updated model. Also to many more things, to the Pioneer Academy, where we go into all kinds of things. Capital, also AGI, the revolution, everything. But back to the model. So I adjusted a bunch of things here, but most importantly, this is the most important thing of the model that got adjusted, the sales projections. We have the Optimus unit sales, install base, and base growth, right? This is Optimus. Here are the years, 2024, 5, and so on. Here you have robotaxis and the RoboFleet growth. So RoboFleet means the install base of active robotaxis and then the newly produced or thrown in robotaxis. Okay, so I made some adjustments. I already made the adjustments. Sorry about that. So you only see the end outcome here. So what I changed on Optimus, not so much. I changed it, I think, down slightly a little bit, but I'm basically contradicting Elon and say we will reach 1 million install base of Optimus in 2029, not 2030. We will be at 2.5 million then. From there, it scales very rapidly. So I'm 1 year ahead of Elon, and I'm firm on this. I would be firm on this. I'm very firm that Tesla will have 1 million Optimus produced in aggregate by 2029. Earlier, I bet on it. I think Elon is lowballing it. He has no choice because there's competition. But you also will see that this actually doesn't matter that much because Robotaxi brings in much more money. We first look at these demand assumptions, right? So the robo fleet, I adjusted that. I tell you guys, I had it very differently. I had this at 3 times lower at 300,000. I had this before. Well, that makes no sense, of course. I had these all down. I think I had this at 250,000 in 2027 and then something like 400,000 in 2028. So I changed this dramatically. I basically said, here it will be 1 million and here it will be 3 million. So Elon said there will be a couple of million of robo-taxis on the road end of 2026. I think that's bogus. And I said, Elon, I divide this by 20. Instead of 2 million, you will have 100,000 end of 2026. But then it will ramp. Why? Because you basically need to really, really, really validate this thing before you do it at scale. So I'm a little cautious here, conservative. If I'm wrong, well, we just get richer. It's fine. But I'm a little cautious here. But you will see what it means to be cautious. It's still crazy. So I'm saying 100,000 in 2026. I think that's conservative. I think it's going to be a little more because we could reach that even this year if it goes right. But let's say 100,000. I'm basically building in some caution in the beginning that this could have some hiccups. But then we clearly scale because you have these cars driving around. You can manufacture as many as you want. We can be at full scale. So 1 million, then 3 million, right? It's pretty conservative. And the final term of this whole thing is, I think people underestimate how many robotaxis you will have in the long term. 2040, as you see, I'm assuming, we're hitting roughly 300 million install base in 2040. Doesn't really matter because there's such a huge time discount on here that even if you change that number down, you could also change it up. You have 1.4 billion cars right now, install base in the world. That will expand, of course. Who will have a car? I mean, actually assuming 300 million, when we have roughly 1.5 billion now, that's only, what is this, 20%? 20% of cars are being replaced with robotaxis. That's not even realistic. I think it will be way more cars, but not way more, just way more robotaxis. So it doesn't matter, forget this. What this model adjustment actually told me, when you look at the numbers, this does not change much. Let's go down here. I'm not going into the entire model. You have to join the Pioneer Academy for that, where we go into all kinds of details of this model. But what you basically see, very interesting, we have the future fair value share price that I'm computing here. By the way, just to explain how this works, this is based on a DCF model. We have the valuation here. So we calculate the actual DCF, discounted cash flow value, 10 years look ahead of cash flows of Tesla. Very conservative. So 10-year look ahead cash flows, discounted with a discount rate that is not too high. I put a 7% discount rate on it. I know you can debate this all day long, but I use 7%. I get to the raw valuation here, DCF total, raw. And then I have a risk discounted. So I'm actually pulling apart this discount rate. My discount rate is only the interest, the cost of capital, not the actual risk. Cost of capital is not risk. Cost of capital is, if you would use this capital differently, how much would you make in order to not invest it in this asset, right? The actual risk I calculate in a separate table, which is this table, where I'm basically using risk inputs and say, what is the total probability that this doesn't happen? Or what is the discounted risk probability that it gets delayed, which is the same thing in the end mathematically. And I break it down into these sub-risk categories like political and regulatory risk, product demand risk, technology risk, that the tech doesn't work, key man risk, Elon, something happens to him, and competitive risk. I lowered the competitive risk now. It's just not happening for Robotaxi. There's either Tesla or no one for now. I think in 2028, 29, that thing will maybe be commoditized, but by then it's too late. Optimus has a higher risk of failure still, but Robotaxi has an aggregate risk of not happening of 30% still. So that is the discount we are applying here for Robotaxi and for Optimus. And this I'm putting then on the discounted cash flow model. So I'm using basically this total raw number discounted here by product line. And then you see what the outcome is, right? So instead of 2.8 trillion Robotaxi DCF value, we basically get to, or whatever, depending on the year, we are looking at 2025 instead of the not discounted EBITDA, we have 4,400, so 4.4 trillion. I take it down to 3.1 trillion because of the risk. It doesn't happen, and if you adjust the risk, it goes up. And accordingly, we have the corresponding share price. That is what everyone is interested in. So if you look at the share price, after doing my adjustments, here's what's happening. As you can see, my 2030 price target is actually surprisingly stable. It's very surprising. Even if we pull all this demand forward, the change on the 2030 share price of 11,800 after risk discount doesn't change much, which surprised me a little bit, but it makes sense because it doesn't mean that the total addressable market gets bigger. It doesn't mean that this long-term 2040 outlook gets different, And so it's kind of logical that there is not much movement. There's roughly $800 or something movement up now, 2030. But here, we are much more interested in this year, next year. We see massive movement. We basically see nearly a doubling of the share price, of the target share price. So that is the big news here. My 2025 target share price goes up from 480, well, depending how we count it, there was one version 600, one 480, to 1,006. So that is my new target fair value share price now for 2025, for this year, end of this year. And for 2026, it goes up from 1,100 to 2,000, roughly. Okay, so what does it mean? The fair value share price is the true value of the share. That doesn't mean Wall Street understands it, but that is my true value, which is very important because that is a very important benchmark for me when I'm making decisions. So what is the trading strategy? Now you have the share prices. And by the way, maybe I go into that one more time. Here is one tab in this model that automatically updates where you have monthly fair value based on these updated share prices. And you see by month what the share price, the fair value share price is. So now for April, it should be 943. So based on this, Tesla should actually be at $900. So the stock discount is $693, which is insane. That's insane. So now it's getting very interesting, right? Because if that's true, that's the biggest bonanza I've ever seen. This is like a magnet. The fair value share price is basically a Warren Buffett of the future share price. What would a Warren Buffett of the future value Tesla at? And Warren Buffett of the future, just looking at 10-year discounted cash flows, would say, well, it's worth $900, but you can buy it for 250. Are you nuts? Buy it. Because in the long run, as you know, the stock market is a weighing machine, and that's the true weight of Tesla. So it has no choice but going back to that value at some point. And the longer it lingers around, the more steeply it has to go up once this becomes clear. For the trading strategy, as I said, we know that in June Model Y is coming as Robotaxi, not the Cybercab. So the bad news is less PR. It's less mind-boggling. But the good news is now we have a whole complex variable less. We don't need to wait and see if these models, prototypes fall apart or something. We have super robust Model Ys. And if you need more Model Ys, it takes no time to just deploy them. At the same second where someone at Tesla decides, we tested 20, they work, make it 100. It takes 1 hour and you have 100 because they're just there. And they are perfect cars. So this is a new focus on substance and not show. It's focusing all on the numbers, which makes it easier for analysts. It's a change in my head, how I view the whole thing. We can just scale. There's 0 obstacles and 0 risks on the hardware side. The Cybercab is coming in 2026, so everyone knows that. And all the analysts know, well, whatever the economics are on the hardware manufacturing side for Model Y, you can forget about them because the cheaper versions are already here. And the Cybercab is coming, so let's already assume these numbers, 20,000 and less costs per car. So seamless scaling in Austin. So it becomes more clear in my mind what will go on in Austin. You basically launch this amazing Robotaxi network, and then you just wait to scale while you're observing only FSD. Does this work or not? Boom, scale in the same instant, same second. You send in some more Model Ys. We have 10 to 20 launching in June at some day. I think within day 30, you can have 100 or more. So in my mind, this is all very important because I know you can knock out all of Austin now. When you deliver 2,000 Model Ys self-driving, Uber dies. Uber is dead. I'm not even talking about Waymo. Waymo does not exist for me. Waymo is stupid. My joke is always Tesla is not going to kill Waymo because to kill something, it needs to be alive. And Waymo never was alive. Waymo never existed as a real company. It was always a joke. And it's a joke to this day. So forget Waymo, focus on Uber. Uber has about 2,000 Uber drivers at any given moment at peak in Austin. Can Tesla scale to 2,000? Yes, they can scale now with the Model Y. They can scale in a millisecond. All they need to see is 20 work. Great. Send in 100. See what happens. Do it for a week. Do it for 2 weeks. Okay, the 100, they don't make any problems. Send in 200. They don't make any problems. Send in 500. Okay, now we have a problem error rate. Let's just wait for a month or two. Okay, now we fix it. Send in another 500 to 1,000 and then send in another 1,000. They can do this instantaneously now. And while I'm disappointed on the Cybercab side, but I get it, it looks less good. I'm getting much more excited now that we can terminate Uber in Austin in no time now. We just sent in Model Ys. So the Uber termination is a very important time in history for analysts, because once they understand Tesla just eliminated Uber, Tesla seized complete control over the entire rideshare market in a city, in a metropolitan area. Not just the autonomy rideshare market of stupid Waymo. No one cares about Waymo. People care way more about Waymo than they should. So we have to care about Uber. Uber needs to be knocked out for this to work, because people think, okay, there's autonomous ride sharing. That's Tesla's target market where they compete. Then once they knock it out, they compete in the ride sharing market. No, forget it. They will skip the autonomy TAM and go right after the ride sharing TAM. Once they have the ride sharing TAM, they will 10, 20, or 30 fold the entire TAM by bringing down prices and increase utilization by the population for ride sharing dramatically. That's the real game. That's how you get to trillions in margin. Okay, so instead of getting too excited about Cybercab, I'm now getting very excited that we might see a complete takeover of the Austin metropolitan ride-sharing market in 2025. And if that happens, it's game over. I think the likelihood is actually high that this year, Tesla will destroy the ride-sharing market of Austin and take it over. So here you have my new probabilities, very important. Let's look at the probabilities for some key events that are catalysts to let that sink into the analyst's head, that there is a new kid on the block that now dominates the entire block, and the block is not a block, but an entire state or entire country. What is the probability that we arrive at Austin ride-sharing market saturation? I would now put it at 95% by Q4. Because the only thing, I mean, pending a June launch that is not a disaster. So I'm assuming, I got a little ahead of myself. So it's 95%. If they launch in June with these 10 and then get to 100 cars, and it just works. There's no major problem. Then we are at 95% that by end of this year, Uber is dead in Austin. We also have a P of over 95% that by end of the year, we will have more cities than just Austin. Because if you have approval in one Texas city, why not in Dallas, and why not in Houston, and why not in San Antonio? So, I think that is very, very important, taking Texas. We have 95% that Uber is dead, of course, if that happens. I think we have an over 50% chance this year that more states are actually rolling out. You have these 7 states, Alabama, Arizona, Nevada, Georgia, Florida, where you basically have no real regulations for autonomy. You just have to have insurance and a car that works. These 7, I don't know how many, this is close to 100 million people or more that you can cover, right? These are big states. Some of them are very big. So we have an over 50% chance that we have more than Texas. And we have an over 90% chance by end of the year, this is all by Q4, that we have line of sight to 100 million US population being covered by Robotaxi. What I mean line of sight, you're not rolled out yet, but you have them locked down. Basically these 7, right? I think by end of the year, it will be announced, okay, all these 7 are under control. I'm not bullish on California because California is woke and insane. They have lots of regulations and they can make Elon's life hard. So whatever, let's see about New York and California, but you have you have hundreds of millions of people outside these states. And we have, of course, an over 90% chance that Cybercab scaled production will be totally confirmed for the first half of 2026. So if all of these are happening, and if these are the percentages, the probability that we are on the rocket ship to 1,000 in 2025 is also 95%. This is important. This is the message from Joe. This is different from my last video. After this earnings call, I'm updating it to a very high probability that we are on a rocket to 1,000 this year. I don't know exactly yet when this year, but I am condensing the window from June 2026 to December 2025. So I also want to share some things in the valuation model now to make you understand why I'm so bullish also on the share price. And I want to talk about cash flows that the analysts want to see and why I believe there will be forced. If this stuff happens, and you see the probabilities I'm putting on it, pending June launch is not a disaster, which is a risk, maybe a 20% risk that something goes actually wrong. So if that happens, I'm saying we are on a rocket ship to 1,000 once this happens, and most of that should happen by Q4 of this year. Now, why am I saying this? Put yourself into the shoes of a greedy analyst, right? You're now a greedy analyst, put your hat on. And that greedy analyst says, I don't care about anything. I don't believe in anything. I'm a cynical Wall Street analyst, and I don't care about anything. The future of humanity, are you kidding me? Who cares? I only care about money, and not even in the future. I only care about cash that's lying right in front of me. In 2025, in 2024, we had 12 billion in EBITDA, right? In 2025, we have a big leap forward. That's the first message. Why is that? Why do we have this big leap? Well, Robotaxi actually contains FSD. I put FSD into the Robotaxi thing. The FSD customers pay for the $99 a month. If we achieve full autonomy and roll this out, there will be an enormous adoption just by customers. And that actually drives margin immediately. So you see an unexpected jump right now, which is encouraging, right? In Q4, probably. Of course, it will not be obvious necessarily this year. It will be obvious in Q1 2026, but you will see directionally where this is going, and they will announce these FSD take up. Then you see a nice growth where Robotaxi starts to actually kick in 2026. But then guess what happens next? In 2027 and 2028, we will see a 300% growth from 2024 to 36 billion in EBITDA. And then we will see insane leaps forward in 2028 to $166 billion in profit. $166 billion in profit. That is very disturbing if you're an analyst, because you're talking about an insane level of growth. And then, of course, it continues. Then you are in crazy land, because then it goes to 348 billion, 350% more margin than Tesla has in revenue in 2024. That is what we are talking about. And that is what analysts will be forced to understand. They will be forced to understand this in 2025 in Q4, and then in 2026. There will be no analyst in the world who can avoid putting these numbers into their models. Because if you do that, that's like malpractice at that point. If you have hundreds of thousands of these robotaxis roaming around and giving you the margins, and you're seeing the cities unlocked, and you see in 2026 the plan, how it's getting unlocked, you will have to do DCF, and you will get to these points. And that is, of course, a total game changer. And that is happening now. Once we are confirmed. That is why I believe Wall Street has to react. So here's what's going to happen to the price earnings ratio, especially the 1 year forward price earnings ratio. The share price will skyrocket, in my opinion, this year and then next year, and that will lead to very high PEs. But look at what's happening then. The 1 year forward PE. It will go to 234 probably this year. It will then go to 180. It then will go to a 61 to 46 to 36 and 37 because Optimus will ramp. And you see this enormous drop of PE. And then basically balance, it's like NVIDIA roughly here. Once it's in hyper growth mode, everyone recognizes it. You're reeking in enormous growth rates at enormous margins, but it's stable. Then you're balancing it out here roughly. So this actually makes sense. But what you see is that the PE will come down like crazy. And that's an indication that Wall Street will agree with me because they are not that dumb, right? At this point here, around these 2 years, this entire thing I'm saying, this entire model, right now it's only for visionary people who can predict the future, but that's very soon not true anymore. Soon everyone, every dummy can plug in these numbers by the end of 2025, if the things happen with, according to the probabilities we are seeing. And then they will see it doesn't matter if you have a 234 PE. If you can already see next year it's 180 and then 61 and then 46, right? That is what matters. That's why you should never look at PEs, but at DCF, right? Because DCF anticipates the cash flow and PEs don't matter. They are a function of the cash flow. So I'm happy to pay this PE if that's the PE I'm having 3 years later at that crazy growth rate of the stock, by the way. So that is why I'm pretty convinced that all of this is happening exactly this way, assuming the probabilities I shared. The odds change now dramatically, as I explained. The $1,000 share price odds go up significantly and shift towards 2025, end of the year, right? Assuming June goes right. Now it's all eyes on June. The $2,000 price target odds for 2026 completely skyrocket. Now probably in June and July, June, July 2025 will be decisive to determine if 2000 for 2026 is realistic. I think it's very likely that June, July 2025 will confirm that, but let's see. The only real risk here, the only risk that I see, because I also think macro is stable and I think this whole war over Taiwan is probably not going to happen. Tariffs are a joke. As we know, this is all going away. Recession, forget it, even if no one cares. So I think macro risks are very limited, especially with the Trump administration. We are just going to go into a golden age and it's going to be fine. So the only risk to everything I'm saying is technical failure. It's very interesting when I look at the comment sections in X, on YouTube, when what people discuss, I put these two camps into the denialists and the delusional people. I'm delusional, the others are denialists. So what I mean by that is, when it comes to Tesla and Robotaxi and the future, I describe it like in a little metaphor. Let me give you the metaphor. You're sitting at a table, next to me is a dude, opposite me are two dudes. It's mostly dudes, unfortunately, not enough women in this game. So the guy next to me is on my side. And we are the delusional Tesla fanboys. And we say, look, there is a bag of gold on the table in front of us. You can touch the coins and it says, take me. You can just take it. And then we are basically on the same page. This guy and me is like, look, there is just a bag of gold. It's called the Robotaxi. It's FSD version 13. Ask everyone. You can touch it. It's there. What do you want? It's going to launch. What do you think is going to happen? It's here. Everyone is confirming it. The Chinese users, the American users, like, what do you want? Do you think it just doesn't exist? The other two guys on the table stare at us and basically tell us, what the hell are you talking about? There is no bag of gold and there is nothing to touch. And then we literally touch the gold. It's like, what? It's right here. Here is the gold. And that's the state of the debate. That's how I feel. I can touch the bag of gold. I can take out the coins. I can bite them. They're gold. The guys right next, opposite us, say, no, there is no bag. There is no gold. We cannot touch it. We cannot see it. So the question is, are they in complete reality denial, or are we completely delusional and can touch and touch this thing, but it doesn't exist? That is the big question with Tesla. The people who don't believe in Robotaxi and FSD literally believe all of this doesn't exist. Cortex is a hoax. There is no H100s. They don't do the compute, and people can't drive themselves, and there are interventions every mile. The other side says, no, there is, we have interventions every 10,000 miles. It all works. I'm self-critical. I don't know if I'm completely delusional. I don't know if everyone else I know is delusional. Who knows? But it's hard to believe. But if we are not delusional, the other side is in complete denial. It's also disturbing. We will see in June. We will see what happens. So this is not going to go on much longer, the denial and delusion. We will know the truth very soon. And I'm just very confident that I know the truth. What does it all mean in terms of options strategy? So first of all, if you have stocks, just you can sleep well, everything is fine, you're probably going to get very rich. But if you're more greedy and say, okay, let's, if we know that much and there's such a disconnect, what can we do? Well, that will be for another video because I have to think more about it. This is all very fresh. You know that I loaded up on leaps. Of course, leaps are not the most efficient thing if I'm actually right. You can pull forward the expiration date, which gives you tremendously more leverage. But if you're wrong, you lose all your money. So leaps, I have a nice buffer all the way to September and some to December. I hold a bunch of December 2026 900 strike price leaps, which I'm still think make me a lot of money, but I'm down 70, 80% with them right now. Very depressing, but I don't sell them, so it should be fine. I didn't double down on them. I doubled down on lower strike price because they were so cheap and they're much less risk. So I'm holding September 2026 400 strike price. I mean, they seem completely no-brainers. So the question is now, in terms of if you have more cash coming in or you want to shift over from shares, what is the right move, right? Is the right move to go more short term? I'm getting a little nervous there, but of course, I mean, the odds are on our side at this point. Is it worth going into 400 strike price calls that expire in December of this year, for example? There's one thing having all these odds for 1,000. It's another thing to have your money on the line for a far out of the money call. But if you buy something for $10 with a $400 strike price and the shares go to 1,000, you can do the math, right? You're talking about 6,000% upside. That's pretty good. So 60 times your money, $10, 400 at 500, you have a 10x. At 1,000, you have a 60x. So tempting to say the least. But if anything happens, you say goodbye to your money. So that's what we have to consider now. And the next question is, with this whole option, more aggressive, shorter term option strategy, is it smart to wait until confirmation and massively de-risking in June? Or does that defy the purpose? I think when we think about risk of not getting in now into more aggressive options, why not wait until June and July until we have full certainty, because we know we have a remaining alpha, because even with full certainty, the Wall Street guys are not going to act fast enough, right? They will still lag 6 months before they really update their price tags to 2,000 or 3,000. So you still have time. But when I do the math and the macro situation and Trump succeeding in the deal making and everything, there is an absolutely non-trivial risk that in July we are at 500. There's a very, very, I would say over 50% at this point that we are back at 500, because now everyone gets it. The shares are up. We can take a quick look where they are in pre-market. So, we can basically anticipate already what's happening. Let me see. Here we have Tesla. It's up $16 at 200. I loaded my leaps at 223 2 days ago. Not bad. But if you look at this, I mean, what do you think happens if the market recovers, the tariffs are over, China is on board? This can all happen in May. The market wants to rally. You can tell here based on these crazy movements. The market wants to rally. Tesla is now the hottest thing in the world for anyone who has any brain. Just watch CNBC, these critical people. Even they now basically say everything I'm saying. They just add, well, I'm not in that business. I only want to invest in things I understand. But then they outline the entire case and say, well, if this is the case, I get the case, but I don't want to invest. I want to invest in something that has existing growth. But even this guy sounded completely like skeptical about himself at this point. So there is a giant wave coming. And what are the odds that if the market resolves in May, that Tesla doesn't go back here before launch or at launch? So I think the odds are much higher than not that we are ending up at 500 in June, July. If the market resolves, they launch and it's fine. And then from there go up. And that means getting in now gives you a ridiculous, like 100% more upside that you would be missing out waiting. So this is a huge price to pay for de-risking. So I'm not the biggest friend of that idea. I will have to think more about it, but that's my thinking right now. I told you guys, this will be the time to really be awake, not woke. Be awake, not woke. Be awake and really watch this channel, other channels, the stock and everything, because these are the times when millionaires are made or when people lose a lot of money. These are the times where massive shifts are happening in the world. Massive shifts are happening now in the next 8 weeks in the markets with the tariffs, and enormous shifts are happening with Tesla and AGI. So we need to stay on top of that stuff. I can only reiterate this. It's not always like this in life, but these are the times where it counts. So I hope that it was helpful. See you very soon. And we have much more to come.